Oil prices are on the rise. We've seen oil prices go up roughly about $10 per barrel over the last month, which is a lot. $10 a barrel signifies, pretty much a lot more profit and a lot more free cash flow for an energy company, like an oil company. And it just so happened that yesterday I was reading another investor's post, and he came up with this company, Equinor, which pays a really high dividend. And he's an investor in, and I thought it would be worth taking a look at this company. The more I looked, the more I liked what I was seeing. So I thought I'd create a video and kind of share with you the analysis that I completed on Equinor, where I think they're valued, if they're discounted or being sold at a premium. And that's what this video is going to cover. It's going to cover this energy company, Equinor, which is a company that is founded and headquartered in Norway, which is a country that has a lot of natural resources, believe it or not. And this company here is very profitable, generates a lot of free cash, and pays a big dividend. So I'd like to get into this company. Before I do so, do me a big favor and like this video and subscribe to my channel. I'm an individual investor. I have an MBA and a lot of business experience, and I like recording videos and sharing them on YouTube. Please provide comments, feedback on this company, or even the video itself, some things you like and don't like. I'd really appreciate hearing from you. Now, let me get into this company. Over the years, I've developed a process that I follow as I look at investing in a company, and it involves 4 key questions followed by a decision to buy, hold, or sell a particular stock. First, do I want to be part owner in this company? Do I like the industry? Do I think the management team's doing a good job operating the company? Do I think debt is under control in less than 3 times EBITDA? And am I getting a discount on the stock? The reason I invest is to make money, and the best way to do that is to find stocks that are discounted, buy them, and see that investment go up in value. And based on the answers to those questions, I buy, hold, or sell. So Equinor, their roots, come out of Norway. In Norway, they have natural reserves for oil. They found it. They have a pretty good amount of oil. And back in 1972, there was a company that was formed. It was called Statoil. And for a long time, that was the name of the company. But more recently, in 2018, they changed the name to Equinor. Their legacy is petroleum and refining that petroleum and getting it over to market, just like any other oil company around the world. They have now diversified into cleaner energy like wind power, which is good to see. And they're kind of trying to transition to a non-fossil fuel future that is probably going to happen over the next 50 years or so. Now, I've been in the investing in oil companies for a little over 30 years. So I'm very comfortable investing in oil companies. I worked at an oil company as an accountant. So I was able to kind of understand the business from that point of view. And I was able to take that experience as I analyzed Equinor and understood where they are in the overall energy market. I like the company. I think that they have access to that European market, so they can really service that market and sell to it. They've also been diversifying and investing in oil reserves and producing oil in Brazil as well as Argentina. So globally, they've been diversifying. I think the management team's really good. So I like the industry. I like the company. The company's been operating really well. They've actually been producing more oil and overall production than they did the previous year. So that's good to see. Now with oil prices going up, the increased production with an increased price is just going to give them a lot more profitability and free cash flow. Most recent earnings is for the second quarter of 2023, and they were really strong earnings. Again, they were profitable. They had solid earnings. Now, compared to last year, they did have a drop in overall revenue, and that's primarily because oil prices were higher last year for the second quarter than they were this year. They had a 30 cents per share dividend, which is really nice. And then it had an extraordinary cash dividend of 60 cents. And keep this in mind. This company, if you look at its stats, on any kind of website, it'll say they pay like a 9.5% dividend. And yeah, that's factual. That's the 30 cents plus the 60 cents. It adds up to about 9.5% dividend. But really, you should really focus on this ordinary dividend, which is what is going to be repeatable. as opposed to the one time that was just a one time. So keep that in mind as you evaluate this company. Looking at their financial statements, starting with the income statement looks good. Now we expect that since oil prices are down, their top line revenue is also down. So that's understandable. It's not their fault that, these oil markets go up and down. Now, what is their responsibility is to be profitable, and they delivered a really nice net income of $6.8 billion. So that's very good. The other thing they're doing well is they're buying shares. So you see that their shares outstanding have gone down if you compare last year's outstanding shares to this year's. So company's profitable, and they're buying back shares. Comparing Equinor to some very recognized companies like Exxon and Chevron. Those are two massive companies here in the United States, as well as ConocoPhillips and Marathon Oil. Their 52-week price performance isn't good. It's down 16%. Their PE is 8.26, where their competitors like an Exxon or Chevron are plus 12, and ConocoPhillips is at 14 and then 11. And I think that discount I think there's some tie to the government that is a disadvantage to an organization like this. And I think they pay higher taxes than an Exxon or a Chevron would pay. So that might be a disadvantage there. So this company generates a fair amount of free cash, starting with their cash from operations off their statement of cash flows. They generated $16.7 billion of cash from operations. They put roughly $4.8 billion of capital back into the business to keep the operations going. So roughly they're at $12 billion of free cash flow in the first 6 months of 2023. That is a very good cash flow amount. I believe Equinor is 41% discounted. And I get to that number by valuing the cash flows they're going to produce in the future, as well as looking at their earnings per share. Let's break that down, starting with cash flows first. So I'm going to take 70% of last year's number. And the reason for that is we have rising oil prices. I didn't want to take the first 6 months and then double that, because that would have just given me a higher number. I wanted to be conservative. And we're going to start with roughly $14 billion of free cash flow that this business will produce. And I'm going to grow those free cash flows in the first 4 years by 4%. And then terminal value growth will be 2%. Terminal value meaning all the cash flows beyond year 4. We're going to discount at 11%, nice high number. This is an international play, so it's a little more risk for me. So I'm going to increase that weighted average cost of capital. Based on that discount rate and the cash flows we expect they're going to generate in the future, the net present value of all those free cash flows is $151.5 billion. They have $19.6 billion of cash on the balance sheet and only $27 billion of debt. So I'm going to add the cash and take away the debt to get to a equity value of $144 billion, which is what I believe this company is worth. The market is valuing the company based on their market cap of at $94 billion. So it offers a 53% discount. If you value the company based on free cash flows, this company is discounted by 53%. In other words, each share is worth $48.41, and the market will sell you shares at $31.60. Now, looking at earnings per share, the company is expected to produce $4.40 of earnings per share in 2023. I'll give them a PE of 10. Even though they're operating lower, I think they should be closer to that 12 that Chevron is producing or operating with, and a growth rate of 2%. Nice conservative number. Based on those figures, we get basically a 15% discount using the earnings per share value, because the calculations say that each share really is worth $36.48, but the market will sell shares at $31.60. I blend these two numbers and I take 2/3 of the discounted free cash flows method, 1/3 of this number, to blend those two numbers and get to a 41% discount on this stock. So let me scorecard Equinor. Is this a company I want to own and an industry I want to be a part of? Absolutely. I think this management team is doing a great job. I really like the diversification both out of the Norwegian kind of areas into Brazil and Argentina, and I like that they're going into wind as well. By the way, debt's well under 3x EBITDA, and there is a discount available on this stock. So I give this a buy rating. I have a big position in Chevron, so I don't have a need to add an oil company to my portfolio. But if I did, I would be buying Equinor. So looking at where the stock has traded over the last year, the stock is down 3% year to date, and it was much higher last year, I think because oil prices were higher. But now that we're seeing oil prices climb, and they may end up climbing to the levels they were at in 2022, there is a lot of room for this stock to run, a lot of value for this stock to rise. I'm valuing the stock at $44.43, and they're currently trading at $31.60. This high dividend that you're going to see listed for this company, it is great that investors are getting rewarded this way. But again, remember, I think only 1/3 of this is going to be repeatable. So more closer to 3% is what you would expect in the future, because 2/3 of it was a one-time dividend that they doled out. Equinor is a really attractive investment idea. I think if I had a need to invest in energy, I would definitely buy some Equinor stock. I think it's a really interesting and attractive investing idea. As I mentioned, I own Chevron. It's my second biggest position, and I continue to buy shares in Chevron. But it's as oil prices go up, Equinor stock's going to go up, and I think it's going to really reward investors. So that's my video on Equinor. Thanks so much for watching. Again, do me a big favor and like my video and subscribe to my channel if you haven't done so already. And just keep in mind, I'm not recommending you buy Equinor. I'm just sharing my experience as an individual investor. And in this case here, I'm taking a look at Equinor. Thanks again for watching. Good luck investing in 2023.